Escalating geopolitical tensions impacting oil supply routes, coupled with corporate announcements confirming massive capital expenditure towards AI, resulted in some market swings. We saw the S&P 500 and the Nasdaq seeing their largest one-day sell-off in over a month, and all three US indices fell across the week. Oil has also jumped 10% this week. But what should we be watching out for this coming week? Well, to talk us through his thoughts, I'm joined by Senior Strategist and Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thank you for having me.
So while we saw a day of increased volatility on Thursday, I think across the week, the S&P 500 is only down around 0.5%. The summer slowdown could be upon us, but what market conditions should we be expecting this week, and what markets are you watching?
Absolutely. These things, if they had fallen in, let's say, spring, or they had occurred in fall, I think we would have had a lot more traction, a lot more significant breakouts, follow through, maybe even the development of some significant trends, largely risk-off trends, because these are heavily negative-oriented news items. But we are dealing with those summer doldrums, and they are quite powerful. It's usually market conditions first, and fundamental themes and event risks second. Technical is always in there as well, but I still think we have this push and pull in expectations. I think a lot of people are obviously overextended long, and while there is a lot of turnover in positioning, and you look at things like options volume, and you look in a shift towards, let's say, the tech-oriented equities towards the blue chip equities, they're still not on aggregate showing a significant unwinding. And I think that's because the recognition that this overextended, drawn out long position in risk-oriented assets could trigger a much more significant unwinding, especially in the lower liquidity conditions that we're dealing with. So a lot of people are reticent to do so, although they are taking little bits of safety here and there, hedges here and there. So it's keeping tabs on what the intensity of these themes are. And you're absolutely right. I think the US-Iran situation is pressing. It's headline oriented. It is urgent, and it is right in front of us. Although we are a little bit overdone with it. I think the markets have seen so much of it that they really diminish its potential in terms of impact, although it is extending the problems for the economy when the eventual recovery and peace come. And then the AI retreat is still a theme that can be anchored in hope and expectation, which is very difficult to have a singular event to swing the market's conviction one way to the other. And you have that markets can remain irrational longer than you can remain solvent moments, where the markets just keep with that enthusiasm longer than we think is practicable. But it's, I think, anchored in these market conditions and the reticence to want to truly unwind this massive exposure. So as an approach from a trader's perspective, I still think I'm oriented towards, let's say, breakouts, maybe a little bit more than ranges, not necessarily breakouts with strong follow through, but the more finite, narrow ranges, and seeing a little bit of follow through should it break a key level, and really holding out for trends more so towards the bear side, because there is a abundance of threats, and we are still overextended, even though a few markets have pulled back, like emerging markets, and just really holding the threshold high before I commit to any kind of trend-oriented exposure that we're not already in. And in terms of the markets to be watching, the major U.S. indices, the Nasdaq, the Dow, the S&P 500, probably in that order, to see where the balance is. And there's some very provocative technical levels out there for the technical traders. Watching crude oil, and crude oil has rallied. It's rallied back to the midpoint of its U.S.-Iran conflict range, so going back to February to now. But I think much more interesting in this is measuring the backwardation. So how much premium there is in the front contract relative to the second contract. That's going to be very important to watch. And also watching things like the US dollar yen exchange rate for the dollar, but really the yen is a big one there. US 2-year yields, 10-year yields as they push to multi-year highs, and also watching the EEM, the emerging market ETF, because there is a very unique imbalance there, and it's really led and paced the risk aversion amid the ongoing Middle East conflict.
Now, turning our attention to themes, we sort of touched on themes here a bit already: US, Iran, earnings, also central banks. What are you going to be watching for the themes next week?
Yeah, there is a lot of tangible, scheduled, traditional event risk on board. So there's a lot to watch. But you have to measure those traditional macro items versus these very pressure oriented, uncertain intangibles. And that is the US and Iran. It probably has the greatest potential of being a bullish orientated rally, so a trigger. And that is if there is a sudden improvement in conditions, although the rhetoric that we've had, it really does not look like it's going to lean that way. But that's where the markets really are recalcitrant in their expectation that there could be a positive outcome here. And it can actually turn out to be a positive surprise if it is. So that's what the circumstances are. And I think that there is going to be some pressure on the White House, given the inventories levels that we have in the United States, including the SPR. So there may actually be a sudden shift towards agreement and peace deal. So one to watch, but also the AI bubble is going to be kind of pressured the hyperscalers and their massive investments in their AI infrastructure. That's going to be a crucial theme. Very difficult to measure to see how that enthusiasm that has driven this massive inflation of capital markets is going to hit its tipping point and reversal. It's very difficult to call those kind of bubbles, but and bubbles can always get bigger before they eventually pop. And now we have a new, or I guess a renewed theme in tariffs, with the U.S. Replacing some of its expiring tariffs with new 301 tariffs, which is now a more broad and potentially slightly higher tariff than what was previously set by the Trump administration. All crucial, open-ended themes, difficult to gauge in terms of how to incorporate it into your projections, because it's all headline driven and in certain terms tweet driven by the president. So it's very difficult to get a good bead on these types of things. But if we are looking at the calendar, there are some very important traditional themes to be looking for. In the second half of the week, we have central bank activity, FOMC, Bank of Japan, Bank of England. We have more earnings on the hyperscalers, very critical, very crucial, including a update from SpaceX. That's going to be one that we want to keep close tabs on. And we're going to get into some more of the traditional things like U.S. and Eurozone GDP, U.S. trade balance, durable goods, conference board, sentiment survey. So there's a lot of interesting stuff that we can actually tap into there.
And then sort of talk us through the top event risks that you'll be watching for each day next week.
Sure. So we start off again. This tends to be a standard or a norm in the macroeconomic calendar. Monday is usually the lightest day. So we start off Monday with Chinese industrial profits, German business sentiment from the IFO, and U.S. durable goods orders. Those are all important themselves, but they just don't compete with the event risk that's coming later in the week. So they're probably going to struggle to generate meaningful traction. We're probably just going to have more of an anticipatory stance than we are a reactive stance on these pieces of event risk. Tuesday gets into a little bit more interesting stuff. U.S. trade, the conference board's consumer confidence report, seeing if it confirms the U of M's rebound, especially amid the resurgence of the U.S.-Iran military activities and the rise in energy prices and other costs. We're also going to have earnings. So we have Coke and Boeing and Visa and Ford, both before and after the close. So that's going to get us back in the earnings swing. But Wednesday is when things get really interesting. Now, I will be watching oil inventories, EIA oil inventories, especially amid this U.S.-Iran conflict. We want to see kind of the tangibles and how fast it's actually spilling over into the economy. But if you're really looking for major market movement, you're going to have earnings after the close, Meta and Microsoft obviously being the bigger one here, and the FOMC rate decision. Now, the FOMC rate decision deserves a little bit more focus by everybody, because this is going to be the second time the new Fed chairman, Kevin Warsh, is going to be deliberating on monetary policy with his board. This is not one of those quarterly events where we have the updated forecasts, although we don't know if those forecasts are actually going to persist. So we want to see, is there an outlier chance, and the markets are pricing this in, of a rate hike? And if you look at the CME Fed's watch, or you look at Fed funds futures, there is a notable pricing in of a possible rate hike at this meeting between 25 and 35%. So if that does come down the line, there's a little bit of anticipation. It's not going to be an enormous surprise, but it still would catch markets off guard if the Fed decides that it wants to tighten rates at this meeting. And it'd probably be the only central bank to do so this week. So we want to see what this has to offer, and definitely watch the press conference afterwards, because we still do not know the make and model of Kevin Warsh's monetary policy drive. Thursday, we get into some interesting Japanese event risk. We have the sale of 2 and 30-year bonds. Those are going to be very important to see their financial situation, consumer confidence. I think it's a little bit more interesting because I am quite surprised by the fact that they have not intervened on behalf of the Japanese yen as it falls to 4-decade lows against the US dollar. And this is going to make their financing very difficult to achieve. So we want to see the data that kind of reflects upon that. We're going to have the Eurozone GDP. We're going to have US GDP later in the day, as well as Mexican GDP. In terms of monetary policy, you have the PCE deflator, although that's probably going to have a lesser impact, considering it comes after the FOMC rate decision. You're also going to have the Bank of England rate decision, and we want to see how their policy mix is going to come immediately after the transition of the prime minister, and see if there's any kind of political impact there. Most likely they will hold, but never hold out for the impossibility of surprise there. And earnings after the close there, we definitely be watching Amazon, but most important, Apple, as it's one of the largest market cap companies in the world, and really talks to the hyperscalers. Friday, we're going to get into some more Japanese data. Jobless figures, we're going to industrial production, we have retail sales, and most importantly, we have the Bank of Japan rate decision. And they're not expected to move, but the pressure is on really one of the few things they can do to materially change the course of the dollar yen and the yen crosses is to hike rates. And they have to do so at a greater pace than its counterparts. But they don't really have the will to do so because it also creates imbalances locally or domestically, and that's going to be a problem. So watch this one to see how the markets respond to it. Chinese PMIs, Hong Kong GDP, which is also a reflection on Chinese economic activity. Earnings is more energy related, Exxon and Chevron to be watched. And there will be a not immaterial expectation or forward-looking attention into the following week, because we do have a lot of event risk, including manufacturing activity from emerging markets to the APAC. We're going to have earnings that cover AMD, Palantir, SpaceX, obviously is going to be the big one, Chinese trade and FX reserves, and of course, non-farm payrolls on that Friday.
Well, still plenty to be watching out for them. Thank you very much for your update, John.
Thank you very much.
For more videos like this, please do like and subscribe.